Our first article is from CNBC. Dark cloud of trade war hovers over Chinese yuan's globalization. The US-China tariff war is adding to weakness in the yuan, as Beijing seeks to promote it as a global currency in line with the country's growing economic clout. Internationalization of the renminbi could slow as the trade war drags on, analysts say. However, they say, the story surrounding the yuan's future is complex and can't be summed up only in relation to China's trade tensions with the United States. The yuan's internationalization is facing headwinds in the form of the currency's weakness driven by the dark cloud of the trade tiff, said Kelvin Lau, Hong Kong-based Standard Chartered senior economist for Greater China. As long as there is more tension and more uncertainty around US and China trade, then you can imagine the trade volume between the US and China will come down, he said. And that sets back the overall renminbi internationalization in terms of the usage of renminbi as a trade settlement currency. The second article is from the Fortune newsletter. The title says, Apple could be China's bargaining chip in US trade war, state-run media warns. Ultimately, the report says, China is now forced to re-examine China-US trade. And it claims that US companies, like Apple, are benefiting the most from China relations. The report called those companies, including Apple, bargaining chips in the conflict and suggested the iPhone maker might want to keep an eye out. If Apple wants to continue raking in enormous profits from the Chinese markets amid trade tensions, the company needs to do more to share the economic cake with local Chinese people, the outlet wrote. Our next article is from ABC News in Australia. China has a bigger problem than the trade war, a mountain of debt. China is also dealing with a mountain of debt, racked up at a massive pace over the past decade, as it raced to catch up with the rich world. It has been fueled by debt at every step of the way, to a point where now Chinese debt levels are in excess of those in the United States. The biggest problem is not the overall levels of debt, McMahon says, but the pace at which it's been accumulated. He says that around a decade ago, China's debt levels were about 160% of the size of its GDP. Now it's somewhere between 280 and 300%, he says. Our next article is from theglobeandmail.com. Chinese exports accelerate even as Trump escalates trade war. China's trade with the US also continued to rise in July despite the tariffs, with exports up 11.2% year-on-year, and imports increasing 11.1%. Analysts still expect a less favorable overall trade balance for China in coming months, given its early days in the tariff brawl. After a strong start to the year, growth in the world's second-largest economy cooled slightly in the second quarter, partly hit by the government's years-long efforts to tackle debt risks. China's imports rose 27.3% year-on-year in July, in a sign domestic demand remains solid, but the worry is that the escalating Sino-US trade war, rising corporate bankruptcies, and a steep decline in the yuan could put a significant dent on the economy. Our last article comes from the Daily Express in UK. It reads, China fights back, US hit with revenge tariffs as Beijing blasts unreasonable Trump. China is slapping additional import tariffs of 25% on $16 billion worth of US goods as the trade war between the two global superpowers continues to escalate. A spokesperson said on its website, the US decided to impose a 25% tariff on the $16 billion Chinese exports to the United States from August 23, and once again overriding domestic law over international law is a very unreasonable practice. In order to safeguard its legitimate rights and interests in the multilateral trading system, the Chinese side had to make the necessary countermeasures and decided to impose a 25% tariff on $16 billion from U.S. imports and implement it in parallel with the U.S. China has repeatedly warned it will strike back against any further punitive measures by Donald Trump, accusing the U.S. of threatening the global free trade order with its protectionism. On Monday, China launched an extraordinary attack on U.S. President Donald Trump, with the overseas edition of the state-controlled People's Daily newspaper accusing him of starring in his own Street Fighter-style deceitful drama of extortion and intimidation. The newspaper also warned the U.S. of arrogance. It said, throughout history, the U.S. arrogantly initiated many wars that eventually ended up hurting itself. Washington's arrogance this time is up against a major power. China has time to fight to the end. Time will prove that the U.S. eventually makes a fool of itself. It added, China will never surrender to blackmail and will definitely rise to defend itself when it involves national interests and national dignity. And the state-run China Daily accused Mr. Trump of bullying. That's all for this edition of News from Around the Globe on the current U.S.-China trade war. We will post more updates soon. Stay tuned.